is Oxbow Advisors managing partner Ted Oakley. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell. Thank you so much for being here, Ted, and joining the conversation. We are talking about the biggest rate hike in more than 2 decades. Your reaction to what we heard from the Fed yesterday?
Well, we think, Maria, that they are raising into really what is a slowing economy. We're starting to see a lot of changes. Rate of change is changing on a number of things. So maybe they stay that aggressive the rest of the year, but we sort of doubt it because we're slowly but now becoming faster on seeing a lot of numbers that are starting to slow down. So we'll see how it goes. But I think, as usual, they're looking backwards, so we'll find out.
Yeah, I mean, look, you make the point that everyone's debating this morning. Was the Fed too optimistic? Was the Fed over-optimistic that this experiment of raising rates considerably and selling off its $9 trillion balance sheet is not going to take us into a recession? Here's Jay Powell yesterday on the economy. Watch this.
It's a strong economy, and nothing about it suggests that it's close to or vulnerable to a recession. Now, of course, given events around the world and fading fiscal policy effects and higher rates, you could see some slower economic activity. I think we have a good chance to restore price stability without a recession, without a severe downturn, and without materially higher unemployment. I see a strong economy now. I see a very strong labor market.
Ted, you think he's being too optimistic?
Maria, I do. I mean, if you look at housing starting to slow down now, if you look at the ISM numbers of the last week, the inventory's going up, orders slowing down. We just don't feel like he's looking at what could happen in here. And I don't know, you may remember, but back in March of 2000, we had a quarter point move in the rates, and the market did the same thing, went up about 2.5% that day. But over that day or the next day, I can't remember exactly, that was the top. So they thought it was the same way back then, and I suspect it will be now as well.
And, of course, now everybody's looking toward the economic data over the next couple of days. I mean, this morning, of course, we'll get the jobless claims out. That's coming out in 2.5 hours. We've got economists expecting 182,000 new claims for unemployment benefits. We are also looking ahead to the April jobs report out tomorrow morning. There, we're expecting a gain of 394,000 with the unemployment rate ticking lower to 3.5%. But, Ted, I guess really the report that is the big focus comes next week when we get the CPI number out on Wednesday. Consumer inflation running at 8.5%. Do you expect that inflation is going to get worse from here, or are we seeing the peak numbers now?
Maria, I think you're peaking right now. We're not saying it will go away, but I think disinflation comes into play in the next end of the second quarter, third quarter, fourth quarter. And so you don't see quite the hard numbers when you get into the third and fourth quarter. We'll see, but if you look at a lot of commodities, a lot of things now, even oil, those things are not as high as they were. So I think those things start to show up in May and June.
Yeah, well, we'll see, because, the peak driving season isn't until the summertime, and energy is underlying a lot of this inflation. So we'll have to wait and see what happens there. Dagan McDowell, jump in here.
Diesel fuel prices are at a new record today nationwide, $5.47 a gallon. Diesel is the fuel that moves the country and moves the economy. We're talking about farming. We're talking about trucking. We're talking about everything. There's been a spike in natural gas prices. And yet, listening to Jay Powell yesterday, he did not use the word transitory in terms of inflation because he was so widely mocked for using it. But the behavior of Jay Powell and company certainly suggests they still believe inflation is transitory. And short-term interest rates, the overnight lending rate is at the high 1%, and you have inflation running at 8.5%. Either they don't know what they're doing or they're lying to investors to keep them calm. Why on the planet with the real interest rates, even with another 1 point increase in the next couple of meetings, would still be, real interest rates would still be negative. And they're waiting until June to start the balance sheet reduction. Again, if the economy is as strong as he says, then this economy, in order to fight inflation, could handle a more aggressive Federal Reserve.
What do you say, Ted?
Well, I agree with Dagan on this. If you look at the truckers, independent truckers, they are screaming out there. They're in a big world of hurt. They can't make a lot of money right now. And I've read a lot about that the last 2 weeks. As far as what Dagan's saying, it's true. I think what happens, though, is that they're coming into an aggressive period they should have done, maybe a year ago. And what happens in these things is they bring it in just as things are rolling over and people are hurting. And then you drive it in the ground, and that's what we think they'll end up doing.
All right, we will keep watching that. A lot of people do expect that we're going to see this rally continue, at least over the near term. Ted, would you be buying this sell? Would you be buying the decline this morning?
We would not. What happens in these, what we call a classic bear market, is you get these rallies, and that's what I mentioned. So you'll get a rally for 2 or 3 days, and people will think, hey, I've got the low now, things are good. There's just too many things coming at us right here for us to say, if somebody could give me the impetus for the upside right here, Maria, I would say, own a lot of things, but we can't see it right here.
You got it. Ted, it's great to get your insights. Really smart conversation. We appreciate it.